Hey everyone, it's EJ and look, hitting that $10,000 mark is huge. It's a major financial milestone, and you should be incredibly proud of yourself for reaching it. Seriously, give yourself a pat on the back. But the journey doesn't stop here. In fact, it's just the beginning. Now that you've built this solid foundation, it's time to level up your finances and put that hard-earned money to work for you. In this video, I'm going to share 5 smart moves you can make with your $10,000 to accelerate your financial growth. We're not talking about getting rich-quick schemes, those never work. This is about making strategic decisions that will set you up for long-term financial success. We'll cover everything from investing to building passive income streams to boosting your earning potential. So, whether you're saving for a down payment on a house, investing for retirement, or just looking to achieve financial freedom, this video is for you. Let's dive right in. Congratulations on reaching $10,000. Now let's talk about how you can level up your money with these 5 smart moves. First things first, let's talk about the cornerstone of any solid financial plan, your emergency fund. Now you might be thinking, EJ, I'm trying to grow my money, not just keep it in a savings account, and I hear you. But here's the thing, unexpected expenses pop up all the time. Your car breaks down, you have an unexpected medical bill, you lose your job, life happens. And when it does, you don't want to be caught off guard, forced to dip into your investments, or, even worse, go into debt. That's where your emergency fund comes in. It's your financial safety net, there to catch you when life throws you a curveball. Having that peace of mind is priceless. It allows you to take calculated risks with your investments and pursue your financial goals without constantly stressing about what could go wrong. Now, a good rule of thumb is to have 3 to 6 months worth of living expenses saved up in your emergency fund. But hey, everyone's situation is different. If you have a stable job and low expenses, you might be comfortable with a smaller emergency fund. On the other hand, if you're self-employed or have a lot of financial responsibilities, you might want to aim for a larger one. The key is to find what works best for you and your risk tolerance. And remember, building an emergency fund takes time. It's a marathon, not a sprint. Start by setting aside a small amount each month and gradually increase it over time. You'll be surprised at how quickly it adds up. Okay, now let's talk about making your money work harder for you with passive income. Most people trade their time for money, working a 9-to-5 job. But what if you could earn money while you sleep, travel, or just relax at home? That's the power of passive income. Building passive income streams takes effort, but the rewards can be life-changing. It's about creating multiple sources of income so you're not reliant on just one. This way, if one stream dries up, you've got others to fall back on. It's like having a financial safety net, constantly putting money in your pocket. So, how do you get started? There are tons of options out there, and the best ones for you will depend on your interests, skills, and risk tolerance. One popular option is dividend-paying stocks. Essentially, you're buying a small piece of a company and sharing in its profits. It's a great way to generate passive income and potentially benefit from long-term growth in the stock market. Another option is real estate. Now I know what you're thinking. EJ, I don't have hundreds of thousands of dollars to buy a rental property. And you know what? You don't need to. There are ways to invest in real estate with a smaller amount of money, like through crowdfunding platforms or REITs, real estate investment trusts. And if you're looking for something a little more hands-off, consider peer-to-peer lending. You're essentially acting as a bank, lending money to borrowers, and earning interest on your investment. It's important to do your research and understand the risks involved, but it can be a great way to diversify your income streams. Chapter 3. Investing, don't just save it, grow it. Now let's talk about putting your money to work in the stock market. I know, investing can seem intimidating, especially for beginners. But trust me, it's not as complicated as it sounds. And the sooner you start, the better off you'll be. Compounding is like this magical force in finance. Basically, it means you earn interest on your interest, and over time it creates a snowball effect that can supercharge your wealth. Think of it like this. You plant a seed, and it grows into a tree. That tree then produces more seeds, which grow into more trees, and so on. That's the power of compounding. But here's the thing. The earlier you plant that first seed, the more time it has to grow and multiply. So how do you get started with investing? Well, the first step is to figure out your risk tolerance. Are you comfortable with a little bit of volatility, or do you prefer a more conservative approach? Once you know your risk tolerance, you can start building a diversified portfolio of investments. Diversification is key because it helps spread your risk. Don't put all your eggs in one basket. Instead, invest in a mix of different asset classes, like stocks, bonds, real estate, and maybe even some alternative investments like cryptocurrencies. This way, if one area of the market isn't doing so well, your entire portfolio won't take a nosedive. There are tons of resources available to help you get started with investing, like robo-advisors, financial advisors, or even educational websites and books. The key is to do your research, start small, and gradually increase your investments over time as you become more comfortable. Chapter 4. Level up your earning power. You know, one of the best investments you can make is in yourself. That's right. Investing in your education skills and personal growth can pay off big time in the long run. Think about it. The more valuable you are to the marketplace, the more earning potential you have. It's not always easy, I get it. It takes time, effort, and sometimes even money up front. But trust me, the returns on investment can be incredible. So, how do you invest in yourself? Well, it could be anything from taking online courses to learning a new language to attending industry conferences. The key is to identify skills that are in high demand and align with your interests and career goals. Let's say you're passionate about technology and have a knack for coding. Why not invest in a coding bootcamp or online courses to enhance your skills and make yourself more marketable to potential employers? Or maybe you're a natural communicator and love connecting with people. Consider taking public speaking courses or workshops to improve your communication skills and open up new opportunities in fields like sales, marketing, or even public relations. Remember, the job market is constantly evolving. What's in demand today might be obsolete tomorrow. By continuously investing in yourself and staying ahead of the curve, you'll be well positioned to thrive in any economy. Chapter 5. Conquering high-interest debt. Alright, let's talk about something nobody really enjoys talking about. Debt. Specifically, high-interest debt like credit card debt. Look, I get it. Life happens. Sometimes we overspend, unexpected expenses come up, and we rely on credit cards to bridge the gap. But here's the thing. High-interest debt can be a major financial drain, eating away at your hard-earned money and preventing you from reaching your financial goals. Think of it like this. You're stuck in a hole, and every time you make a minimum payment, you're just barely keeping your head above water. But the interest keeps piling on, making that hole deeper and harder to climb out of. That's why it's crucial to tackle high-interest debt as quickly and strategically as possible. One effective method is the debt snowball method. Basically, you list all your debts from smallest to largest, regardless of interest rate. Then you focus all your extra money on paying down the smallest debt first while making minimum payments on the rest. Once the smallest debt is paid off, you roll that payment amount into the next smallest debt, creating a snowball effect. Another popular method is the debt avalanche method. This approach focuses on paying down the debt with the highest interest rate first, regardless of the balance. This way, you save the most money on interest payments over time. Whichever method you choose, the key is to create a plan, stick to it, and celebrate your wins along the way. Getting out of debt takes time and discipline, but the feeling of freedom and financial security on the other side is priceless. And once you're debt-free, you can redirect that money towards your other financial goals, like investing, saving for retirement, or even pursuing your passions. Outrow your journey to financial success starts now. So there you have it, 5 smart moves you can make with your $10,000 to level up your finances and set yourself up for long-term success. Remember, building wealth is a marathon, not a sprint. It takes time, effort, and discipline, but the rewards are well worth it. Don't get discouraged if you don't see results overnight. Stay focused on your goals, stay consistent with your efforts, and never stop learning and growing. The financial world can seem complex and intimidating, but it doesn't have to be. There are tons of resources available to help you along the way, from financial advisors to online communities to educational books and podcasts. The most important thing is to take that first step and start taking control of your financial future. Thanks for watching. And remember, the best time to plant a tree was 20 years ago. The second best time is today. So what are you waiting for? Go out there and make your financial dreams a reality. By following these 5 smart moves, you can make the most of your $10,000 and set yourself up for long-term financial success. Thanks for watching, and don't forget to like, comment, and subscribe for more financial tips.